Hey guys, how's it going, and thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't. Don't forget to subscribe for more videos, so let's get started. So I haven't done one of these videos in a little bit. I'm talking faster because this is one of those quick stock picks. See if we should look into it a little bit further and kind of just going over the basics of this individual company. So shout out to K2, which suggested this stock. I know it took a while for me to come out with this video, but I did because it's definitely very interesting. With the market down, people are crazy and panicking all over the place. This might be one of those recession-proof stocks. So let's get right into it with SO, the Southern Company. So this is their max chart. You could see they were in, I want to say that was like high 30s. Just before the crash in 2008, and in 2009 it dropped to the high 20s. So not huge drop like some companies dropped like half of their value. So this definitely dropped less than that. And the recent 5 years have been basically fairly steady. It's a 47 billion market cap. PE ratio right now is 19, and when your target estimate 46 right now, the price right now is basically right there, just a high 45 level. So what does the Southern Company do? Well, this is their profile and description of exactly that. The Southern Company, through its subsidiaries, engages in generation, transmission, and distribution of electricity. You could pause the video right there if you want to read a little bit more into it, but it is a utilities company. Now, if you saw a recent video of mine, I went over some individual industries. While the stock market was down, these specific industries were up, and utilities were one of those industries, and SO was one of those companies. So some of their statistics, like we saw before, their PE is 19, forward PE is just over 15. Now the 52-week change, they are down more than the market, over 11%, while the S&P 500 is just over or just under 2% right now. Not the best market going on right now. Some people are saying that it's in a bear market. It's kind of been in a bear market for months now. However, you can see like the chart before, it has been fairly steady over the past 5 years. So during those 5 years, the low point was usually in the low 40s. Now, it did fluctuate as every stock does, but when it is at that level, it usually rebounds. So its average level could be around like mid 40s, which it is right now. So going into some of the numbers with this company, we could look at their revenue from 2014 up until now. Now, they are higher, a little bit of fluctuation throughout the years, but definitely looking good. Gross margin is increasing actually very nicely. And if we go into the income, which I love looking at, this is a little bit of a different story. You can see some of the charts on the right as well. They're kind of all over the place, and recently in 2017 their net income did drop, probably for a reason, maybe with the we could see like negative 1.7 billion up there, but maybe interest expense. But this is a quick overview, just something to watch out for. Going right into the balance sheet for this company, we can see they have around a $2 billion cash position. Their current assets is 10 billion, and their total assets is 111 billion. Looking on the opposite side for the liabilities, we see they have a little bit of short-term debt of just under 4 billion, but their long-term debt is very, very high of $44 billion. Their current liabilities is 13, and their total liabilities is 85. So their assets do outweigh their liabilities, so that makes it a good thing to know. So something to understand, guys, this is a utilities company. People are going to be continuously paying for their services and all that stuff, no matter what really happens in the economy. So that's why, like, the debt is definitely concerning, especially with increasing interest rates. Debt becomes more expensive. But with this type of business, people are going to continue paying them. It's not as risky as like other companies with huge amounts of debt. All right, so this is Dividend. This is one of those websites that goes into dividends of a lot of different companies. So you can see all their information. They do have a very nice dividend of over 5%. Sorry, forgot to mention that before. Very nice dividend, over 5%. Been paying for 36 years. Now, something cool about Dividata, they kind of give you an overall rating of the company and their dividends. So overall rating is a 4, so above average. Dividend yield, like we saw before, a 5%, which is very nice. Dividend history, they've been paying for a long time, and dividend stability is above average. So let me go to dividend history, and you can see they've been paying since, since 1982. There was a huge spike in, what year was this? 2001. Not entirely sure why that is. Maybe something to do with stock split. Sometimes this website is kind of iffy, so some numbers are weird, but we can see right here is very attractive. Since 2001, they have been increasing every year until this year. So this is definitely a steady stock that's going to continue to raise its dividends in the future. So, of course, there's a lot more to go into. However, this quick overview gives you a nice understanding of the business. This is a utilities company. It is more steady compared to like these tech guys out there who's getting destroyed right now. These are a little bit more stable, have a beautiful dividend. So this is a great way to diversify and kind of recession proof. We saw in the last crash, of course, most assets do decline during a crash because people basically sell everything. However, these companies dropped less than other companies, and they still have that beautiful dividend to keep you happy during that time. So this is definitely something to look further into if you want to build your portfolio not only toward growth, but this could also help with income and a little bit more stability. So, great pick in my opinion. Definitely look over what's going into detail with this company, but I would say give it a thumbs up to move forward if you want a little bit less volatility, less roller coaster ride like we're having right now in the stock market. So thank you so much for watching, guys. If you want me to do any specific quick stock pick to look at, you can leave your ideas in the description. Questions, comments, concerns, again, down in the comment, not description, in the comments. But thank you so much for watching again, guys, and I'll see you in the next one.